Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Is TRID slowing you down? Not if you're closing with UWM. While other lenders are struggling, we're closing most TRID loans in 15 days or less, thanks to easy-to-use tools like UClose and Ease, and direct communication from submission to close. Get United at UWM.com.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network. And it's brought to you by our good friends at United Wholesale Mortgage, who have so many things to offer you, including UConnect. So get this, if you do a transaction with them and then sometime later that client is looking for a refinance, they'll find that out and send that client right back to you. Well, last week we got the jobs number. It was a big number, 292,000 jobs created, and in addition to that, we saw another 50,000 revisions. So why did the bond markets not really do too poorly? Why didn't stocks do so well? I'll tell you why. Because 40% of the job gains came from people ages 16 to 19 years old, and that is why we didn't see wages rise, we didn't see unemployment really decline, because perhaps some of these people for the month of December were part-time workers. And certainly 16 to 19-year-olds aren't going to be drivers of the economy in a way where they're going to be the big dollar earners as well. So a lot going on behind the scenes in the jobs number, and that's why interest rates did not move very negatively. In fact, you could say that by this big job growth number, the Fed's hand by these job creations may now be pushed to hike rates even more. Stocks won't like that. And in addition, when we take a look at stocks not liking that, that means bond prices will and can improve, because as money comes out of stocks, it will go into the bond market. We know already, and talked about this in the past, that when the Fed hikes rates, doesn't necessarily mean higher mortgage rates. And look, that's played out since the December 16th rate hike. You know, you heard it here first. We talked about the fact that mortgage rates would actually improve, and of course they have. They've gone down by 1/8 to 1/4% in rate since the Fed came out with their Fed rate hike on December 16th. So all of these factors, very contrary to public opinion, very contrary to the media, are based upon, if we understand the dynamics of the market, we can certainly be assisted by these going forward. Now, looking ahead to this week, we are going to get some housing data which will begin, inflation data which will begin. So a lot to start to look at and break down as we get into the numbers over the next couple of weeks, especially for some of the economic variables that will impact the housing market. But with regards to the stock market, since the beginning of this year, stocks have had a tough time. I wouldn't be surprised for stock prices to drop by 10, 15% at some point during this year, because I think that the stock market is vulnerable. Corporate profits are declining. In addition to that, the Fed is now not an ally to bail the stock market out. In fact, the Fed can be a significant headwind. On top of that, revenues are struggling. So when we take a look at this all from lofty levels with high price to earnings ratio, think that the stock market looks a little bit vulnerable to me. That could be something where if the tide does turn, we get that big dip, interest rates could drop rather significantly. 10-year Treasury drops beneath 2% again. We could see some important variables take place in favor of bonds, weigh against the stock market. And energy prices, you look at oil around $33 a barrel, my goodness, 12-year lows in West Texas Intermediate or WTI oil price per barrel. This does not show the stock market a lot of confidence that there's huge demand out there as well. We have oversupply of oil. So a few things clouding the picture for stocks, making the picture a little bit more attractive for bonds. And certainly a big beneficiary of all this would be housing. Now, stock market drops 10 to 15%, okay, housing will still be strong. But we have to be careful here, because if the stock market does take a significant tumble, it's not out of the question, that could start to weigh on home prices, as the wealth effect Ben Bernanke wanted to create by propping up the stock market could now work in reverse as this trade unwinds. So lots to look out for. We'll be there to break it down. And if you want daily analysis and charts and tools that you can share with your customers, why not take us up on a free subscription to MBS Highway? Click on the link below and do so. And if you already used up your free trial, why not sign up? Best investment that you'll make. Cost you less than $1 a day after your tax benefit. What the heck are you going to do with less than $1 a day? Are you going to really spend it on something that's going to be more valuable to help your business benefit your clients? Talk to you soon. Bye-bye.
Today's Master of the Markets was brought to you by United Wholesale Mortgage.
At UWM, our AEs receive over 500 hours of training each year to keep you current with the industry. We give you direct access to your own team of underwriters who return your calls in 3 hours or less. And we provide exclusive products and tools that give your business a competitive edge. In fact, everything we do at UWM is dedicated to championing your success, which is why more brokers choose UWM than any other lender. World-class service, exclusive products, groundbreaking tools, and you. Get united with us at UWM.com.
This is Mortgage News Network.